Okay, so let's start. Welcome to Stock Wizards Advanced Stock Market classes. So now what we are going to do in this class is like I am going to give you an introduction of financial markets where you can trade or invest in financial markets, which consist of a lot of assets or a lot of items to invest or trade, you can say. So basically this financial market consists of stocks, stock futures, options, currencies, commodities, bonds and mutual funds, as you can see here. So I assume that you already know all these things, and let me take you to the next slide. Okay, good. So the main topics that will be covered in our trading mastery course will be first introduction. No, you won't have the PPT. Kindly have a notebook, and you might have a video access for your lifetime. So not a issue. Fine. I will be uploading this in my website, and you, as you are a member, you can come in and visit again and again, and you can see. But better you can make a note of this when I will say to make a note of this. This is not required to make a note right now. This is just a theory part. Okay. I hope my voice is clear to you. So we are mainly going to cover the basic introduction of stock market. First of all, what is stock market? What is a stock exchange? What is a who are brokers? What is a demat account? And all those things we will cover in the introduction part. Second, we will be going through the volatility assessment. That is total volatility of or the sentiment of the markets going on either in India or US. As you know, US is the main market which drives the other markets. Fine. So are you aware of volatility assessment? Okay. So we have a specific chart for that also. It is called as India VIX, and I will show you that in future classes. Fine. The next is fundamental analysis. As we have discussed, fundamental analysis will help you out in identifying good companies and bad companies by going through their normal nature of business. We will be seeing their quarterly earnings, balance sheet, and much more thing in fundamental analysis. So it will help you out in becoming a more professional trader. Fine. The next is technical analysis part. You might be aware of a lot of technical analysis, moving average, RSI, MACD, Bollinger Band, and all those things. So as far as my trading and my investment is concerned, I don't use moving average, I don't use Bollinger Band, I don't use RSI, I don't use MACD. According to me, all of those are lagging indicators, and only thing that you should be using according to me is the price of the stock. So we will be purely doing trading or investing based on the price action that happens, and the rest all, as you know, the candlesticks, bars, Ranco, or point and figure chart, line chart, these all are representation of the prices. Am I right? Okay. So the next what we will cover is it is a risk management. This is the most important step in the investing or trading in stock markets or in any other market. Each business is associated with a proper risk management. proper backup. In any kind of business, backup has to be there with the investor, or future plans has to be there. If this and this goes against him, we will be doing this and this steps. So that is what actionable steps and implementation is, that what should be done in such and such scenario. And risk management everybody teaches in the last, but what we will do is we will understand this first today itself, risk management and the proper way of trading and investment. So is it clear till now, and is it okay? Fine. So let's move on to the basic next slide, that is introduction. And before that, as you are aware of traders, traders are those individuals who invest in markets for shorter time, like a 1 day, 2 day, or even they do intraday, or even they do swing trading. They hold their position for 3 days, 4 days, or 1 or 2 weeks. Proper investor is those who will be carrying their position for more than 1 years. Fine. So this is something that I'm going to tell you, like why do traders lose in the market? As you know, 99% of traders are losing in the stock market. This is the reality. Am I right or am I wrong? Fine. So this is the reality. So we have to come in that 1% group, and we don't want to be in the 99% group. So why do they lose their total capital or capital in the stock market? These are the reasons, because they are part of these things. They don't have a proper trade plan, first of all. So what is a trade plan? Trade plan is nothing but, before entering a trade, you should be aware of what is your potential risk. What if the risk happens to be in or against you? Sorry, if it happens to be against you, if you are losing in the trade or in the investment that you have made, what is the proper risk in that? And what will be the proper target for your investment or trade, or till when you have to hold it, or what is your proper plan with that trade? And as you have already defined with the what is the loss and what is the target, the proper entry that you will be taking, is it proper? That you have to decide before taking any investment decision or any trade. So taking a proper entry and having a proper stop loss with a clear mindset of target, these are three basic things that you need to have in your plan, trading plan. Is it clear? Okay. Second thing, they don't go for high probability trades. You have any idea of what are high probability trades? No. Okay. High probability trades are the ones which will go as per your thought. That is, as you know, the main market movers are none other than big institutions, FIIs and DIIs. So they have the power to drive the market. Am I right? Okay. So going in favor of FIIs and DIIs in a trade or investment, that will make your trade more highest probable trade that you have ever taken, because these people, FII and DIIs, are the main reasons to have any big movement or small movement in the stock market, and they create volatility inside the stock market. Without volatility, we won't be able to trade itself. So high probability trade is going with them, and finding out areas and potential areas of trade that can be existing, which is in favor of FII or DII. For suppose, let me explain you this a little bit. We will go into more deep into this later. If suppose I am an FII and I am buying shares for around 1 lakh, 1 million shares, if suppose. So will I get 1 million shares immediately? No. Okay. Can you tell why? Why I won't get 1 million shares immediately? Okay, I will tell you. See, when I am selling a stock and you want to buy, if I don't sell, no, there is no limit. Listen, I will tell you. When a stock is bought, someone else is selling it. That is when you are able to buy. Am I right? Fine. So when I am I am an FII and I am buying 1 million stocks, there should be a seller who is selling 1 million stock. Am I right? Okay. When one big institution, one big FII is buying 1 million share, there I bet you there won't be any other institution competing with them, because all of them are very planned and very well educated, and they will not lose their amount or money in stock market. So they have their different perspective. So with whom will they come and buy? From whom? Simply they will come and buy 1 million shares from the retail traders like you and me. Am I right? So when I punch a 1 million buy order, I won't get it fulfilled immediately. What will happen is, half of the million order I may get today, and rest half of the million order will be pending in the market. What these people do is, they will just punch the order and they will wait, because for the rest of the amount the volatility has been created in the market, and these exchanges like NSE or BSE, these people give some amount of interest for this leverage. Am I clear to you? Okay, so have you seen some stock suddenly going from low to high, and then in few days it comes back again and then rises again? Okay, this is because those unfilled orders of the half million order which were pending at the same place, the market will come there and fulfill those orders and then go back again. Is it clear to you? Fine. So we will be covering all those things to spotting all those unfilled order areas future in this class. So let me come to the next thing, that is poor money management. This is very clear, you can understand it. This we will cover later. Poor risk management. Fine. And fifth one is the very important. It is greed. You know what is greed is. So have you ever fell into this? Like if you have bought a stock and then you kept on holding for more, and it went up, went up. Okay. So every trader, every investor is a part of all these 5 things. We have much more. Let me show you the next slide. Sixth is the fear. You still have the fear of SBI. I'm right? Whether to hold it or not, whether it will, yeah, that is the fear. So these two things, greed and fear, should be eliminated first of all. The seventh point is they don't treat trading as a business. They do these people, these losers, what they do is they do this as a gambling, satta. Is this clear to you? And eighth point, this is where many people come and fall into the trap of intraday or short-term trades. Want to make more money in short time. Have you not thought that immediately you want to get big in and you will invest in stock market and it will give you returns so much in a short span of time? Everybody thinks this. Okay. Ninth is no discipline. By discipline, what I mean is when you have bought a stock, you know this is the price to exit. You people don't exit, or if it goes against you and you are in a loss, you know you have to exit there. But still, what these traders will do is they will keep it on hold and they will hold the position, thinking that it will go up in some time. इतना गिर गया और कैसे गिरेगा? So this thought comes to everybody, and they come into this group of traders who will make just losses. Fine. 10th is no system. The only thing you can do to make money in stock market by investment or trading or day trading, anything, is by following a system properly, either built by you or built by someone and that you follow. Is it clear? So I will be training you enough to build your own systems, and you can slowly test and research your own thing, come up with something else. Fine. That we will cover later. So this is why people are coming to us, stock wizards, that we have a very good system for all of the traders, whether you are experienced or not, or if you are very experienced also, we have something for you also. And we are in a process of preparing totally automatic trading systems, algo tradings. So बातचीत हो रही है उसके लिए भी फिलहाल. Fine. So this is basic candlestick. I hope you are aware of this. The low point, this area, fine. If it's a green candle, that means it opened low here and the close is above the open. If it's a red candle, the close is, yeah, bullish. If it's a red candle, the close is below the open. Fine. These are tails. If it makes a high and then comes back again, it forms like a tail, or people can call this as upper shadow or lower shadow. There are plenty of names for this, or it can be called as wicks. Fine. For a green candle, this is the high, this is the low. High and low are both same on both the candles, only the open and close will change, and we will see all this in real time action. This is general introduction to financial market. What is financial market? Fine. It's a market where people trade financial securities like stocks, commodities, equity, and options, futures, currencies, and all those things. So there you can see all the products are divided into some subcategory, or their industry-wise classification is done. You can see that. We will see this also in real time. We will go through the sector-wise analysis later. This is general about what is a stock exchange. It is a place or it is a market where securities are bought and sold. Securities in the sense stocks or all those things, fine. Then what is a demat account? You are aware of demat account properly? Opened, but you should know proper demat. What is demat? How the name came? Fine, I will tell you. These shares and securities which we are buying or holding, this we are not getting the physical delivery of these things. So this goes and gets saved in a form of electronic form, which is dematerialized. Fine. So that is why the name demat has come to this, and it can be opened by any broker or sub broker. Is this clear? Dematerialized form of stock. Okay, fine. And you should be aware of these things. Depository service. You after you take a trade or you might get a message in form of message or email from NSDL or CDSL. These are the two big depositories of India. NSDL stands for National Securities Depository Limited and CDSL is Central Depository Services India Limited. These two depositories act as a bank for your stocks and shares that you buy or hold. Fine. Then what is fundamental analysis? I told you this before. It is a method of evaluating security in attempt to measure its intrinsic value. This means the first line, the meaning of this line is it is a method of evaluating a security in an attempt to measure its intrinsic value. That means a stock is there. Let a stock be at 100 rupees or 200 rupees. We discussed this in last WhatsApp also, that the proper value of that stock, like what should be the current market value. It is at 100, fine, but the real value, do you know? Like for SBI, do you know the real value of SBI right now? No. So that is what is intrinsic value, the real value of SBI based on its productivity and growth. फाइन, मतलब एक स्टॉक का जो प्रॉपर एक्सपेंस और ग्रोथ, फ्यूचर ग्रोथ सब है, वो प्रॉपरली उसका वैल्यू क्या है, क्या होना चाहिए और अभी मार्केट वैल्यू क्या है. अगर उसका वैल्यू ज्यादा है और मार्केट वैल्यू अभी कम है, देन इट इज अ स्टॉक वर्थ बाइंग, राइट. So we will be focusing all these things in the fundamental analysis section. Then the next is economic factors which can have an influence on stock prices. मतलब there are some events, जैसे अभी यूपीए इलेक्शंस आने वाले हैं, इलेक्शंस का रिजल्ट्स, सॉरी इलेक्शन तो हो गया है, यूपीए इलेक्शंस का रिजल्ट्स आने वाला है. सो व्हाट विल हैपन इज, वो जब आने वाला होगा उसके अभी से क्या हो रहा है, व्हाट इज हैपनिंग इन द मार्केट इज, the market is little slow right now from 4-5 days और 5-6 days. थोड़ा ऐसे ही डबल साइड मूवमेंट्स हो रहा है, मतलब एक क्लियर इंडिकेशन नहीं है, धीमा धीमा चल रहा है. तो जिस दिन रिजल्ट 11 तारीख को आने वाला है, इट इज कमिंग ऑन 11th. So on 10th, 9th, 10th and 11th, you will see drastic volatility in the, the market. The result is coming on 11th. Market will show its behavior on 9th, 10th, from tomorrow. 9th, 10th, 11th, it will show. Fine. That is what this economic factors may, that is a political factor which comes inside that. Then there is some change in economic policy, monetary policy हो गया, कुछ हो गया उसमें. ये जो third you can see economic and political shocks. This election results comes inside this economic and political shocks. Fine. Then supply and demand for a product. This we will discuss later. Like based on supply demand, which stock you can buy. Have you heard of seasonal buying of stocks, Arvind? Have you heard of seasonal buying of stocks? Yeah, that is fine. But I'm asking seasonal buying of stocks. Yeah, that is seasonal buying. For suppose before Diwali comes, it is cleanly understood that all the electronic industries and all those things, TVs, fridges और वो सब चीज़ों का जो कंपनी का जो स्टॉक होगा, it will be little bit high. So before that season comes, 2 or 3 months before, we can start accumulating those stocks based on technical factors also. So this is what seasonal buying is. This we will discuss. Then the rest all factors are just influential factors. This we will discuss, and how we can get free access to these all things. We will discuss it. Then you know about what is meant by trading. Fine. So here I have written, trading is the business of buying and selling of various financial instruments like stocks, currency, commodity और ये सब. ठीक है. Okay, this is how stock exchange works actually. They are governed by SEBI. You know that, right? SEBI has its own rules for these exchanges. Fine. Everything happens inside under the SEBI only. Next, what is an index? It is the total value of the exchange index. We can say like that. Fine. Total shares, if you include, it makes a proper index. And what is Nifty 50? Nifty 50 is that consists of all major 50 companies or stocks. Combining all those 50 major companies or stocks, they are called as Nifty 50. Is this clear to you? Okay. So see, here I have given you Nifty was from these two words, national and 50. Fine. And this is all are general basic. You can see, refer to the video again and go through this. See the last point, what it is saying. CNX Nifty is professionally maintained and is ideal for option trading. So many traders outside from India also trading at Nifty. This note this line, we will discuss this in future classes, that CNX Nifty is professionally maintained. What was the meaning of this line? Fine. This Bank Nifty, again second most popular index of National Stock Exchange. Have you ever traded in Bank Nifty, Arvind? Either it's Bank Nifty future or option, have you? Okay, you have not. Are you aware of it? Okay. This I said about volatility assessment. So it is also called as VIX, so India VIX. So you can, whenever you have a doubt in what will be the Nifty movement or कैसे हो सकता है Nifty का, you can see VIX chart and make a little bit adjustment in your trading. That this and all we will work on when we deeply enter into the major classes or curriculum. Okay, this is very important for option traders, understanding volatility. Then what is the share price? This this is the basic, everybody knows this. uh, price of single share is share price. Fine. Next, we will see what are the basic representation of stock price or price action. Like I talked before, all these are types of charts that prices can be represented in. So, do you have any new name over here which you are not aware of, Arvind? Okay, you are aware of all these kind of charts, right? Okay. Do you know how to use each charts, Arvind? Okay, you don't know. Fine, fine, fine. So this is an introduction to trend. You might have seen my candle only. Okay. You might have seen my video about trend trading, and if you have not seen, you can see that on YouTube, or we will be covering that in the class. That is the better thing for you. Trend is like following a same kind of direction for a particular period of time. It can be upside, it can be downward side. Sometime there will be no trend, so it is called as sideways trend. Okay. This is a normal picture of downtrend. Are you able to guess this? Like downtrend कैसे हुआ? मतलब exactly where the downtrend started? Lower top, lower bottom. Okay, lower top. So you are saying lower high. Okay. So I am giving you access to the mouse. Show me where exactly the downtrend started according to you. 1 second. You have the mouse access. Show me. You can take the pen tool from below and show it here. Show it to me from exactly where, according to you, the downtrend started. Are you there? Okay, it's taking some time, it seems. We will discuss this thing later as you are not showing it exactly where, according to you, the downtrend started. It's fine. Can you hear me now properly, or my voice is gone? Cursor not moving. Here is the cursor. See, you try to move. Yeah, it is moving. You take the pen tool. Here you can see the pen, and you can take the pen tool or a highlight. You can take the pen and draw it here. Okay, fine. You do one thing, Arvind, cursor is moving, but I think because this is white, you can't see this properly. Now cursor is here. You can slowly try and see. It is moving from your end. Fine, okay, we will continue the classes. We will discuss this tomorrow or next time. This is an example of downtrend for now. Okay, and this is normal way of drawing a trend line. You might have seen this before. Okay. Okay, there are two types of traders, Arvind. The first one is non-organized. Second type of traders is well organized. We have to be in the second type of trader. So the first type, as we discussed earlier, they do this as a gambling, and the second well organized traders do this as a pure business. They have a proper trading plan. Their money management skill is excellent. Risk management skill is excellent, and proper quantification is excellent. And they are called as professional traders. So are you aware of proper quantification? I'm asking, are you aware of quantification? What is quantification? Proper quantification. Are you aware of this term? Numbers. Okay. We will see this in a detailed view today. Fine. So these are various types of trading styles, and trading is choosing quantity. Yes. And how it is chosen? Are you aware of that? How to choose proper quantity? There are various types of trading styles. You might have heard all of this: intraday, swing trader, positional trader, value investor. Intraday is buying stock on the and exiting on the same day. Swing trade is buying stock today and minimum holding it for one day and maximum for 1 week or 2 weeks something. Positional traders are those who buy stocks today and they hold it for 1 month, 2 months, 3 months. A value investor is a person who holds the stock for 3 years, 6 years. They will get the fair value of the stock and they will buy with that fundamental analysis. Fine. Trading is pure probability. Am I right? Yes, it is a 50-50 chance always, and you require a good high probability system with a low risk. We will discuss this in detail. This is the question for you, Arvind. There is a stock is at 100 rupees. So which of the following option is the best for you? If the target is 110 and stop loss is 90. Second, if the target is 120 and stop loss is 70. Third, target is at 130 and stop loss is at 80. Fourth, target is 106 and stop loss is 98. Which is the best option among this according to you to buy a stock which is at 100 rupees? Okay, I did not see your message. What did you type? Okay, option A is the best option. And may I know why? Okay, very good. What is the second one? What ratio is the second one then? It's a negative one, right? Okay. What is the third one? D is also good. The only good in this is D. And the proper answer should be D. Because, yes. Okay. D is giving you 1:3 risk reward, which we want to focus on our trades. Yes. So that is what we will be focusing mainly on our trade. In intraday, even 1:2 will do. That is fine. But positional trade, 1:3 is required minimum. We do not take trade which has risk to reward below 1:3 in positional trades. Am I clear to you? Okay, this is the logic of stock market. You make money when someone loses their money. You agree with this? Right. As I discussed earlier, when I am buying a stock and if someone else is selling, then only I will get that stock. Fine. And when I buy a stock and I sell it at higher prices, I am gaining that. Zero effect. What is that zero effect, Arvind? Can you tell me please what is that zero effect? Okay, that is called as zero effect. Okay. One loses, other gains. Fine. Here things are different. Many loses, one gains. This is how it happens. And those ones are FIIs and DIIs. Okay. This is my previous class and class course fees. You can see you are studying this course at a discounted price. Basically, this is because they don't know how to look for FIIs. Okay, you are lucky for this price or to spot FIIs. No, no, you will be feeling more lucky when you see the next slide. This is the basic course. Fine. These are the things that will be covered in the basic course. Using just price action, candlestick patterns, moving average ATR, MACD, pivot point, Fibonacci retracement and extension, Gann theory, trend trading. We will be using candlestick patterns for sure. ATR we will be using sometimes. Pivot point we might use. We will not use MACD. Fine. Fibonacci we may use. GAN theory, we will be knowing the GAN theory, and when time requires and when we need to apply that, we will apply that also. Trend trading, we will be following the most. We won't use moving average, we won't use RSI and all those things. Fine. This is why you should feel lucky, because your course covers this thing. This is my previous slide. Professional course only for full-time serious traders at rupees 62,500, and you have been lucky to enroll for just 15,000. I have discussed all these points with you, I think. Advanced option strategy, portfolio building is anything, yes. Accumulation distribution zones we will cover, yes. Okay, trading option with directional movements and non-directional also. Identifying institutional behaviors. Okay, trading in zones, this we will be doing. So you can feel more lucky today night. You have, the prices have been, yes, GAN also will be covered. Do not worry about that. GAN theory, we will cover the basic GAN theory, we will cover the GAN angle and GAN squares of 9, that also we will cover, do not worry. Is there anything that is not included in this course? Do you feel like that? Is there any strategy or something? Have you heard something else from outside and it is not in this? Like any system or Hajmola? Fine. I am asking you, is there any particular trading style or trading strategy or system that is not included in this slide and the previous slide, and you have heard of it and you want to learn that? I don't think. Okay, there are few, I will tell you, like Ichimoku type trading is there, and what else is there? Moving average, I told we don't use that. RSI we don't use. Okay, there I think there is only one thing, Ichimoku, and I am not knowing any other name to describe. And normal patterns like head and shoulders and all those things. That are some basic things that we will cover along the way. Though we won't be using that much. This is an introduction to option. What is the option? As the name suggests, वो एक option है. I want what? Why we won't be using, you want to know? Or what you want to know? What you are saying? What you want? What did you mean by what you want? Okay, by mistake. But what did you want? What you said? I want. Were you coming to say you wanted to learn options? Okay, leave it. Fine. Option, as the name says, it is an option. मतलब एक stock से derived product है ये. This is a by. Okay, you want to learn a system which will work rather than, okay, fine. We will do that. Option is nothing but an derived product from stock. That is why it is called as derivative. Even future is derived from stock. The normal stock belongs to the owner. Like Reliance का जो stock है, it is for the Ambani group. अंबानी का है वो, exchange का नहीं है वो. You understood? But उसी का future belongs to the exchange and option belongs to the exchange. Is it clear to you? That is the difference. Fine. Like if there is an option of Reliance, the main thing to look for that option will be its stock prices. That is the underlying asset. Did you understand? Okay. Same way, if you are trading in Nifty options or any other index options, the spot prices of those index will be compared before trading into the options. That is the underlying price. That is a spot price. Is it clear to you? Okay. We will be covering this thing in advanced classes of options, which is included in your course. It is called as option Greeks. Option Greeks are like the inside value of options. If a stock moves with 1 rupee, how much will the option move, or how much movement will the option make? There is a time decay in option, like it is valid for only 30 days of the contract from the issued date, and when the contract comes to an end, the option value also expires. This we will discuss in later. The key Greeks are delta, gamma, theta, vega and rho. This and all we will cover in the options class. Fine. See this point. The direction in which an option price is about to move is predicted by Greeks. This is how people are being trained, and this is how people will tell, like, for so and so Greek value this should be make movement like this. But we will be mixing it up little differently with the stock prices, and we will take only directional trades. Only on few occasions we will be going with the non-directional trades. That I will differentiate you what are directional and what are non-directional. When you are very unclear about the market condition, what is going to happen, you will buy a call option and you will buy a put option at the same time, similar to hedging. Call option is when an investor or trader thinks that the stock prices may go up. So he will buy a call option and he will sit. If the prices goes up, he will profit from that. And same way, put option is something when an investor thinks that stock prices will come low. He will buy put and he will sit. As the stock prices come down, the put option value goes up. This is how they profit from put. This we will discuss in detail. As I said, delta, gamma, theta and all these things. Vega, rho, fine, this we will discuss. Various types of option I told you now, call option, put option. In that call option, put option, there are three different things. One is at the money, one is out of the money, one is in the money. This we will discuss further because it requires detailed discussion. As you can see from this, I have given, you might be aware of all this, but I am telling you, strike price is equal to spot price, strike price is greater than spot price, strike price less than spot price. There is much more to be discussed in this. So I am just going forward. This is to tell you what and all we are going to cover in the course. Same way for the put option. These are the various strategies of options used by many others. Long straddle, debit spread, credit spread, iron counter butterfly, short strangle, ratio, yes, calendar spread, covered call. But I will cover you all these things, but I don't use any of these strategies, frankly saying. I use something different of my own, which works for me very well, and will be teaching you that also. So it depends on you what you want to apply. So this is what our course covers, and will cover all the essential required to make you a more professional trader and gain knowledge. Fine. Welcome again to the Stock Wizards Advanced Stock Market classes. We have a bit to cover more. In another 10-15 minutes we will cover it up. Give me a 5 minutes time. You can have water. I will have water and come back. Then we will start again. Okay. So shall we continue again? Fine. So this is just beginning of your financial freedom. As stock market is a very wide and vast subject, and now I am trading and investing in this for more than 13-14 years now. Okay. These are the preferred class timings. This was the early timing also. Now also it is there. Okay. This was earlier provided as a demo, and that is why that message has come. So let's start with the main thing, that is the risk management and how to treat stock market business as a pure business. Okay. So as you know, every business requires capital. So do the stock market business also requires some capital of investment, right? So what is most important in stock market is protecting and preserving your capital is the most important thing in stock market. Okay. So we have created ourselves two or three different thumb rules which we follow till now, and you will be learning this, and we recommend you to follow this also with your trading so that you will become a professional trader in your trading career. So whatever amount you are investing, first of all, everybody when they come and learn from me, I suggest them to invest 100 rupees, because when you can't manage 100 rupees, how can you manage 1 lakh or 10 lakh? Am I correct? So the first step is open your brokerage account, put 100 rupees in that, and do business with the 100 rupees. And once you develop and get used to the stock market and its condition, then go with a higher investment. Do not put all your hard earned money at once. Fine. So the main rule which we will be following is whatever might be the investment, we will be doing total 5% of risk on that investment. Fine. Below I have explained here with an example. Okay, here you can see total 5% of risk will be allotted to the investment that we are making for one particular stock. So we have 20 different options to invest in. Is this clear to you? Okay, so you can invest in 20 stocks at a time. Fine. So when you do start doing intraday, and this 5%, what you will do is you will split up this 5% into 5 parts. That is 1% risk in a trade. Is this clear? Clear. So total amount जो भी आप इन्वेस्ट करोगे उसका 5% ही होगा आपका टोटल रिस्क टेकिंग कैपेसिटी. 20 डिफरेंट स्टॉक्स में आप इन्वेस्ट कर सकते हो. आपके पास चॉइस है. इसको दिस इज कॉल्ड एज डाइवर्सिफिकेशन और पोर्टफोलियो बिल्डिंग. तो जब व्हेन यू आर डूइंग इंट्राडे, जब आप इंट्राडे करोगे 5% का जो टोटल रिस्क होगा इसको आप डिवाइड कर दो 5 से, तो टोटल आपका 1% रिस्क होगा हर ट्रेड पर. मैक्सिमम ड्रॉडाउन जो होगा वो 1% रिस्क होगा. And the total this is an example. If suppose you invested 1 lakh rupee, stock price is at 100 rupee, and total risk is 5%. Am I right? So the 5% of 1 lakh is how much? 5,000 is the 5% of 1 lakh. So the maximum quantity of stock that you will be allowed to buy will be total risk allocated, that is the 5%, and rupees 5,000, that is the total risk allocated, by divided by total risk in terms of rupees in that trade. The stock is at 100 rupees. You can make note of this, please. Stock is at 100 rupees. This is the backbone of your trading and you have to follow all these things. Stock is at 100 and we have assumed that the stop loss where the position where we will exit is 98. That is 2 rupees is the stop loss. So total allowed quantity to trade in stock this particular trade will be 5,000 divided by 2. That is 2,500 quantity. Is this clear to you? Okay. This is what we discussed. 2,500 quantity of shares is the allowed quantity to you. Fine. Now, if you divide this 2,500 quantity into 5 parts with same risk of 2 rupees, you will get the quantity as 500 for each share. Let me explain this to you. As per discussed earlier, 5,000 was your total risk in rupees and 98 was your maximum drawdown where you will exit. So 2 rupees was the risk in that trade. So allowed quantity was 2,500 quantity. So whatever happens, you will not lose more than 5,000 in that single trade. Fine. Now when it comes to intraday, we will split up this 5,000 into 5 different parts. And before that, let me tell you one thing more. When you have invested 1 lakh rupee and 5,000 is your capital maximum risk, so it would take you 20 chances of being losing this all 1 lakh rupee. Am I right? In a single consistent way, if you lose, just hold on. In a single consistent way, if you lose 20 times, then only you will make a loss. Total your capital will be eroded. Do you think that will happen in stock market? Okay, it can happen. Fine, good. But as far as I am concerned, and with your 1:3 risk reward, will that happen? No. So it's a confused thing. If such thing happens, kindly let me know, because I have not seen such thing continuously happening for 20 trades. Okay, as I told, it's a 50-50 probability. Okay. So when it comes to intraday, I said we will split up this 5,000 into only Pagal can do. Fine. So this 5,000 rupees we will split up in 5 different parts in intraday. That is 1,000 into 5. And for same example, if we are doing the same example with intraday, your maximum allowed quantity per trade with stock at 100 rupees and risk at 98, it will be 1,000 by divided by 2, and 500 quantity is what allowed to you to take a trade. Am I right? So this way you have 5 different chances of trading in intraday. So you can trade 5 times in intraday with same risk and reward strategy. Did you know all these things properly before, or now you are knowing about this properly? Okay, you did not know about this. Now is this clear to you how it is a business? Not knowing before. Okay. So you have 5 chances in intraday to trade. This is the next thing that we will discuss. Risk to reward part. I told you that minimum 1:3 is required for the position trade, and 1:2 will do for the intraday trade. This is where the magic of stock market comes in. If suppose you bought the stock, that is maximum allowed quantity was 500, right? And you bought the stock at 100, your risk was 98 rupees. So 1:2, your target will be 104. So what will be your potential profit if you hit the target? That is 500 allowed quantity shares into total price movement for 2000 rupees. So how much is the this 2000 rupees on 1 lakh? What is the returns in a single day that you gained in stock market? 20 percentage. Isn't that great? Yes. So will it be fine if you get just 1% per day? Yes, it will be fine. Because if 1% per day, 1 month without any omitting leaves and all, you will get 20 percentage. In your for 5 months, you will be doubling your amount, isn't it? So even 1% or less than 1%, between 0.50 to 1 is also enough to make huge amount of money in stock market. Yeah, it will, not should, it will, because to make 1%, how much quantity you have to buy if the price move to the 4, if price moves by the 4, price movement is 4, for me to get 1%, how much quantity you will invest in? To make 1%, how much quantity you will invest in for 1 lakh capital for the same if the price makes a movement of 4? 25 quantity, right? 25 into 4, 100 rupees. Is that 1% of 1 lakh? No, it is not, because 1000 is the right answer. So what is the quantity you will invest? Because you are silent from so much time, and that is why I am distracting you. 250 is the quantity that you will be going with. Ah. So you have many more chances of investing in intraday. So 250 quantity in the sense, total number of trades that you can trade is 10 times, or how many times? Okay, it is a good number, 250 in intraday, 250 stocks, and if the stock makes 1 or 2 rupees movement, you will get a good amount of return. And for 1% movement, you require minimum 1000 rupees to make for 1 lakh capital. And that is very much possible with 1 lakh capital and using the leverage of the brokerage company. But initially, we won't be using any leverage. Let me tell you that very clearly. During intraday, these brokers provide leverage of around 10 times in share Khan. Some might provide more than 10 times, 18 times, 20 times. It is a very dangerous tool, leverage. Okay. I think you might be knowing what is leverage is. So this is the last of today introduction session. After this, we will be going from tomorrow into the deep advanced class session of our advanced stock market courses. So when you do intraday, first of all, if you are doing intraday, you should include these two things in your trading. That is, you should have a daily goal. Zerodha gives 10 times, Sharekhan also gives 10 times. Some other new companies gives 18 times, 20 times. Fine. So you should have these two things in your intraday trading. That is to have a daily goal. Like you should have a fixed mind that I want to take this much amount from the market today, and once you take that, once that amount comes into your account as profits, you should exit the market and close your system or do some other analysis. Do not trade again. This is the first thumb rule. And the second thumb rule is, this is very important, the maximum drawdown per day was 5% in your trade. Okay. So if you are getting hitting with 5% in a single day, do not trade again. That will help you out in preserving your total capital. Okay. So these are the two things that you should look for. Tomorrow we will start with fundamental analysis first, and slowly we will get into technical and fundamental both at the same time. Okay, we will meet tomorrow again. Is this clear to you? How was the class today? Is the class okay? Okay, time. One second, let me stop this recording. Once again, thank you for joining and all the best with your trading career, and welcome again to Stock Wizards.